Good morning, everyone, and welcome to the Ankerstar Wealth Market Update. I'm your host, Allison Ankerstar, and today we'll be talking about the S&P 500 correction, Lowe's earnings, and Palo Alto's networks earnings. But before we begin, as a reminder, this financial education presentation should not be construed as personal financial advice. Full disclaimer information is available on ankerstarwealth.com. Good morning, Steve. The S&P 500 has officially entered the correction territory yesterday. Where does the market go from here?
Hey, good morning, everyone, and thank you for your patience. A great question, Allison. But thank you for your patience. Recently, we've had some sound issues, so we think we've cleared those up today. But again, continue to give us feedback if you're hearing some weird sound things, that sort of thing, or if you have other ways you think we should be doing business. Please let us know. We love the feedback, and we get better from there. Also, another improvement, you can hardly see it here, but I also have my Ankerstar Wealth name tag finally came in. So the flight suit is complete for when I go out and speak, not only in the morning show, but also in public. So back to the question at hand, S&P 500 in correction. What does that mean? Well, we were just here. So sharing out to you now, you can see this is the TD Ameritrade Think Pipes charts. This is where I have four of them pulled across for you to see. And you can see the pre-market action, which is the light blue on the three left screens, has been really all over the place. So in the green overall, but it's certainly been jumping around. So that's kind of the short term of where we are this morning for the S&P 500, the Qs, which is NASDAQ, and then Apple, and of course Black Rifles continues to power higher on a daily basis. But as far as the S&P 500, what you're looking at is a one-year chart here left to right. Obviously, we had the peak at the beginning of the year, and it's been the house of pain ever since. But we've been here before. The good news is we were here, not the good news, but we were here at the end of January, basically 10% we dropped in the month of January, hit the intraday correction phase. So again, that candlestick hit the correction phase, and then we bounced from there. You can see, so the last time we were here was a month ago, and there was a pretty significant bounce of about 4% coming off of this low. Then we kind of did the inverted W here, where kind of found itself, tried to power higher, and then really, when you look at this, what is that? 6 of the last 8 market days have been down. So we really are due for that big green day. Yesterday I called that. I don't really make daily calls, but I did face a comment from a client later in the day yesterday. Said, I loved your optimism yesterday. It didn't really play out, and I'm like, that's true. But I was a buyer yesterday. I bought on that optimism, and it's turning out to be pretty good for today, because the futures are up, at least in tech, are up over 1%. So when you look at where we are right here, exactly where we were when we faced this congestion last time, and if you really keep the big picture in mind, same congestion back here, 5-6 months ago. So even though this has been painful in 2022, we're kind of back to where we were, 6 months ago. So for long-term money, it's kind of not that big of a deal. Obviously, if you put a big chunk of change and short-term money in here, you're down. Even bonds are down. They've been selling off a little bit due to the increase in interest rates. So it really has been, and everything has been selling kind of market. So I think we're poised for a big green day. When you look at the technical indicators here, both are screaming buy. So I would say big green day in order.
Switching to earnings, home improvement store Lowe's beat earnings this morning. Is Lowe's a buy, sell, or hold?
Yeah, so Lowe's had a nice earnings beat this morning. The home improvement stores, both Home Depot and Lowe's, have always been pretty good investments, right? People are working on their homes. Generally, trying to, natural disasters tend to happen on a regular basis. So that's obviously going to continue. You couple that with everybody, not everybody, but certainly COVID forced everybody to rethink their work environment. A lot more people working from home. So you get into a situation where more time at the house, more house projects, more home improvement stuff. So really Home Depot and Lowe's are really pretty good investments. When you look at now those are reflected in the numbers here. So kind of the top line here, Lowe's added 1.6%. It's actually up almost closer to 5%. Now I'll take you to another screen here in a second. You can see they beat top line and bottom line, and then they issued upbeat full year guidance. From an earnings perspective, those are the three things you're looking for: is revenue, profits, and then whether they guide up or down with their future projections. And generally the stock moves a lot on the projections, not necessarily, the first two numbers are looking backwards, and in investing, we look forward. So that's where you can get an earnings beat out of a company, and then they guide down, and then the stock sells off hard, right? Because they aren't anticipating being able for these things to continue. In this situation, I like everything I see about Lowe's. We'll switch over to the chart here. So, that's a 1 day. Let's go to a 6 month. So really, when you look at the entry point, you can see up 4.4%. This is live real time, 15 minutes prior to the market open. So here's the bounce, right? So the bounce was off about 215. It's sitting at 224. It was at 260 in December, 260 again in January. When you look at the overall numbers, it does pay a, 1.5% dividend. That's kind of nice to have that, coming in. Off 17% for the year, PE ratio of 19. So really, all in all, it's pretty cheap. It's a good theme. So I would classify Lowe's as a screaming buy for your portfolio.
Last question. Cybersecurity firm Palo Alto Networks beat earnings last night after the bell. Is Palo Alto a safe investment?
Well, you have Palo Alto here. I've highlighted it again back on CNBC.com here. So they beat estimates by 9 cents, earnings and revenue, top forecasts, and then they gave a better than expected forecast forward. So they say, up 7% so far pre-market. I will say I love the cybersecurity space as far as when you think of the pipeline attack from what was that, a year ago, where they demanded ransom in Bitcoin. There's we're talking cybersecurity stuff with the Russia-Ukraine situation, and that Russia's participating in that. I'm sure the United States has their own operations going that involve offensive cybersecurity. We call it offensive because we're the U.S. Obviously, they would call it, if we were Russian, we'd call that an attack. So cybersecurity firms and the entire cybersecurity theme, I think, are poised to make a lot of money over the long term. It is difficult to go individual best of breed stocks in the space. I kind of like the ETF cyber, CIBR, better, and that's what I have a lot of folks in. But again, this space the theme has run up hard, and the valuation isn't super attractive, if you will. I like it if you're going to long-term buy and hold sort of investor. But if you were to, when you look at Palo Alto specifically here, here we were at the end of the year. It's dropped down to 475. It's bounced some, but certainly not the same level that the rest of the market is kind of sold off, if you will. And then when you look at the PE ratio, you're looking, first of all, they're not profitable. They're intentionally running as a loss. But, negative 90 PE, a lot of negative numbers down here. So I think the valuation is a challenge for Palo Alto. If you want some and you buy it, just plan to hold it for a while. But to conclude, I think the better way to invest in cybersecurity as a whole is to go off into the ETF that has Palo Alto as a large holding instead of the individual stock.
Thank you, everyone, for your questions. Please submit your questions as a comment through social media or directly to our email at vipservices@ankerstarwealth.com. That's all we have for today's show. I'm Allison Ankerstar, and we'll see you back here tomorrow.